Welcome back to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon and Haddad. How are you?
Good, brother. Just getting ready. Got a few things coming up this week, which we'll probably go over in our next podcast. But just excited, man. Business is picking up. Our community is exploding. Fuses around the corner. We're gaining traction left and right. A lot of great things, my friend. A lot of great things.
Absolutely, absolutely. We have a lot going on today. We have the Broker Buzz, where we dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we'll go into the sales pitch training, where John helps us become better salespeople. Then we wrap things up as we always do with story time with John. But first, how we start every podcast after this little introduction, fortune cookie. Probably making too much noise in my mic. That's fine.
No, it's good.
And then today's fortune. Your future is a river. Let it flow with prosperity.
I love that. I absolutely love that quote. Just sitting here, enjoying it. And, the thing with quotes, Tommy, that's fascinating is it does require you to think about what it means to you, right? And
Oh yeah.
there's people out there, especially when I was, and I don't know if I want to use the word younger, but younger is the word I will use for this. When you're younger, sometimes you hear certain quotes like, oh, whatever. And fine, fair enough. I'm at a place in my life now where when I hear quotes, I do like to try and think about them and, hey, well, how does this apply to me? What does it mean to me? So for me, with the future and the river, it's even at a river, right? Tides can pick up, things can get faster. You can go through rocks in certain situation, and it still flows. And that is life. Life is flowing, and there is prosperity as part of it as long as you can keep pressing forward. So I love that quote, man. I love that quote.
Yeah. For me, it's very similar, and I took it a very similar way where it just keeps flowing, whether you want it to or not. You can find yourself in a place where you're just stagnant. You can't just be stagnant. Like you are moving, but you could have, like you said, the rocks and the more difficult times, but you could have the smooth times as well. And it's just life is the river, and it's gonna bring new things as you flow down. But
Spot on, man.
let it flow with prosperity.
Yes, sir.
So let's dive into the broker buzz this week with our first question. I have an FHA purchase and a car was sold, financed vehicle. As this is still showing on the credit report, I want to remove this debt for DTI purposes. I am being told that if there is no replacement vehicle, they must use the monthly payment on the sold vehicle. No time to do a credit supplement to remove this debt. Has anyone ever heard of this for a finance vehicle? I know about the leased vehicle rules. Thanks.
Yeah. So, look, you have to understand it from the investor side of it and what they're talking about for those that don't know. So, on the credit report, it'll say leased or it's financed. And if it's leased, generally speaking, even if the debt is to be paid off, the insinuation is that, hey, even when this is paid off as a lease, the client's going to get another car to lease. So, technically, most of the time, they won't let you just remove a lease from the client's situation, even if that lease is getting ready to be completely done. On the financing side, there is opportunities to where when you do pay that debt off, then there's a chance for you to exclude that debt. It sounds like the underwriter is simply asking for an additional credit supplement just to extra verify that it is completely gone for them to remove it. So it doesn't sound like the underwriter's saying, I won't exclude it. It sounds like they're saying they're taking an extra step to protect themselves as an investor. Now, whether you agree or disagree on this, that's a completely irrelevant topic. A lot of lenders, they're setting up potentially overlays, and this might be an overlay. But if they're setting it up, it's because they may have been burned in the past on an audit. That's what happens a lot of the times. They're not putting rules in place because they want to keep adding more and more rules. But as you get audited, it's not always objective. And I know you guys are going to freak out. How is it not objective, John? It's just not. Each regulator at certain times in certain states is going to look at something maybe a certain way. And so if they flag it, the lender might just say, you know what, I'm going to change this policy across the board. So that lender could have in the past had to take on a buyback, which is basically, hey, the loan wasn't underwritten correctly. So we as the investors are coming back to you, the lender, and saying, we need you to pay us 70 cents on the dollar for this deal. So now they're stuck covering the entire cost, 70% of that loan on their own book. So to answer your question, I have seen it before. But generally speaking, you don't always need a credit supplement. In this case, it does sound like an under overlay. It doesn't sound like there's much you can do from a pushback perspective. Get that supplement as fast as humanly possible. Push out that closing, call the listing agents, call everybody, call the client first, let the client know the situation, and then ask the client for permission to share this information. Get an email about it. I was just talking to my team about this. If you ever have to share something that's personal, just to really talk through the deal and say, hey, I can get this done. We can close. I need more time. Always get an email from the client verifying that they're comfortable with you sharing that. I always do that. Then call your agent after that, tell your agent, and then offer to call the listing agent. Say, I will call the listing agent. I'll do it. And then when you call the listing agent, you have the permission. You can walk them through. They're going to be pissed. You're going to be pissed. Just so you know, they're not going to just say, oh, wow, I'm so happy we're pushing out closing. Be ready for the blunt force up front. It's okay. Mute your phone and just tell them you're right. Definitely did not think it was something I was going to need to do. It is on me. I do have a solution for this. I need X amount of extra days, but we will have it done by this day. And whatever time you think it's going to take to get it done, add a day. If you're like, I'll have it done by Thursday, tell them Friday. I promise you, you will thank me later. And for the love of God, try not to close a loan like on a Friday or Monday. If you're fixing something like this, you see what I'm saying? Because if you do a Friday, it is what it is. People check out. It's a ghost town in many places. After 3, 4 p.m., getting responses is hard. And then trying to schedule for Monday, you're stressing out Sunday, walking in to a closing Monday morning that isn't even fully ready to go yet. So take your time, get in front of it, have the conversations. I have seen this before. All the time? No, but I definitely have seen it. And it sounds like an overlay and something that we just have to push through and get through.
Got it. Understood. Next question. Borrower defaulted on their SBA loan during COVID and then had a bankruptcy in 2022 to clear it. Trying to go FHA now, but SBA is saying they can't clear CAIVRs even though the debt has been forgiven. So, can a borrower never get another government loan? Anyone else run into this and know a workaround?
Yeah. So this is really, really good. So a CAVR first and foremost, y'all. So a CAVR is to make sure that clients don't have any kind of potential government specific debt. So VA loans, FHA loans, these are backed by the government.
Would student loans count in that?
If they're federal student loans, you are correct.
Okay.
So there's a report that's done called the CAVRS report, and it stands for Credit Alert Interactive Voice Response System. So this is alerting the lender of any potential issues this client might have. It's attached to your social security number. Now, these are government debts that pop up. So Tommy just gave one great example of a government potential debt. Government student loans will pop up on a CAVR report. If you've ever defaulted on an FHA or VA loan, it could pop up on a CAVR report. And in this instance here, it sounds like the SBA loan is popping up on the CAVR report. So the person is asking, the loan officer is simply saying that, hey, there's an SBA loan that has popped up on my client's CAVR report, but the client filed bankruptcy. Why is it still popping up if the client filed bankruptcy? Bankruptcy, in most cases, is simply saying that, hey, we're going to clear your debt depending on the type of bankruptcy. Now, there is multiple types of bankruptcy. There's two main personal types of bankruptcy. There's Chapter 7. Chapter 7 bankruptcy is basically saying that, hey, I can't pay any of my debts back. Wipe me clean. Chapter 13 is saying I can pay some of it back. So there's a little bit less there's more lax on a Chapter 13 because the client is saying, hey, I will pay some back. Chapter 7 is saying, wash my hands. I can't, I have nothing. Please, I can't pay any of my debtors back. Just please wipe me clean. And now on top of that, there's also a Chapter 11 bankruptcy. A Chapter 11 bankruptcy is specific to your business bankruptcy. So in this case here, what I have seen happen, and it sounds like the same situation, the client's cleared of their personal debt and personal obligation. The SBA may have been, since it's a business loan, may still be funneled through the business itself and was not cleared as part of the bankruptcy. If that is the case and the CAVRS report is on there still and it pops up SBA, you are correct. You cannot do a government loan. Does that mean you can never do one? The answer is no. There is a phone number almost every time on the CAVRS report. So go pull that phone number and call the number it has on there, have the client call, or you can call with the client, and it'll tell you the process and the steps that have to go moving forward. So This is possible. It can happen. And then the last piece of it is the way that the bankruptcy is written, it'll tell you the specific debts that were cleared. So if you need to pull the bankruptcy paperwork, I would ask the client for it. You have opportunities to pull the bankruptcy paperwork online, a system called Pacer. Pacer login. You need to know the actual court that the bankruptcy was filed in for you to pull it. Then you can read the bankruptcy paperwork, go through and see what was included and what was excluded as part of that potential opportunity. So that is the steps that I would say to move forward. Get the bankruptcy paperwork. If for some reason in the bankruptcy paperwork it's said to exclude the SBA loan, you'll have a fighting chance to call them. However, from my experience, generally speaking, because of the different types of bankruptcies, that Chapter 11 SBA that is tied to is going to be hard to get relinquished, and it will take time before that consumer can do a government loan. Tommy, I feel like I crushed that one.
You did. I learned a lot in that one.
Dude, keep it for the edit because I was on one.
Absolutely. We'll cut that one for sure. And our final question this week: what do you answer to your clients when they ask why use a broker?
So I love this, Tommy. First thing I say is really simple. All right. I always got this like laugh on my face, and I mean it because I get this question so much, and you learn how to answer it. And I always say to the client, I said, Tommy, I am biased to this question.
You got to get that out there.
I want to start there. So I am going to be biased, and I'm going to give you a couple tips here. One, I did work retail, so my scripting does have to do with retail personally. I know that for many of you, that's not the case. So I'm going to give you two versions here. So my version, because I worked in retail, is this. I am biased, and I'm not going to pretend like I'm not. And outside of us having access to lenders and you working with me personally, here's what I'll tell you. I worked in retail for 6 years. There's a reason I switched to this side of the industry. And it's not because retail's bad by any means. It's just because I felt like there was a better opportunity to serve clients on this side of the fence. And that's why I decided to jump over to the broker space. So at the end of the day, you got to do what's best for you and your family. I believe that the product I put together is go right back into it. It's that simple for me. If you're someone out there never in the retail space, you can even make it more simple than that. Hey, I am biased to this. I've only been a mortgage broker. That's all I know. That's all I live and breathe. And what I can tell you is this. We have access to X, Y, or Z. But more importantly, it's the relationship that you and I build. I don't look at you as a transaction. I want this to be a long-term commitment to each other. And I know that might sound funny the way I'm saying it over the phone, but the truth is people don't look at their mortgage like they look at their own personal health, personal finances. You're doing check-ins yearly with your doctors. You're doing check-ins with your financial advisors if you have them. And I believe a mortgage for most people is their biggest financial asset. So having somebody that lives and breathes this and does it all day long, at least in my eyes, seems to be in your best interest. So why use a broker? That decision's up to you. I can only tell you why I believe our option is the best for you and your family because it accomplishes pivot into the goal. Right back into it. That's how I do it. I always address my bias right away. And to pretend you don't have a bias is a lie. Okay, don't lie. Just tell them. No. Look, I have a bias. This is hard for me to answer.
And I think laughing during that carries a lot of weight.
And it's real. And every time it's not even, it's instinctual now. It's not even, it's just like they say it and and it's funny. I did it in retail too. I would tell people that all the time. I have a bias. I don't know what you want me to tell you. I have a bias. This impacts me in one shape, way, or form. I've told clients that, look, I get paid commission, so you working with me, of course I want you to. There's an opportunity for me to take care of you, but also take care of my family. I'm just very upfront, and people are, I don't know. I've had a lot of luck with it. People eat it up. They enjoy it. And they love the directness because I know not nobody else, but a majority of people are too nervous to say that to a client. They're too nervous to tell them about their pay. I'm not.
You're providing a service.
We are. And even when we talked about pay before, how do you explain borrower paid? Third pays the lights. Third goes to taxes. Third goes in my pocket. Okay, cool. Thanks, John. Awesome. Thank you. Any other questions on it? Nope. Wonderful. Let's move on. So that's how I do it.
Absolutely. Well, if you want your question answered and you are an AIME member in the Brokers Are Best Facebook group, use the hashtag #BrokerPowerUpQuestion and we will get your question answered here on the podcast. If you are not, scan the QR code in the next ad and take a look at all the benefits of being an AIME member. They keep growing day by day. So stay tuned when we'll be back with a sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
All right, and we're back. John, how are we becoming better salespeople today?
Yes, sir. So last week we talked variable income, and we got a lot of really good traction on explaining variable income and going through that process with people. So I'm going to keep it in the same light. And what I'm going to talk to you about today is how to approach an underwriter. And why do I say it that way? Because a lot of the times what I see from our community is when something goes wrong or something goes south, they really want to just hammer the underwriter hard. And don't get me wrong, I'm not saying that every underwriter is perfect and they do everything perfectly. Yes, I know there are silly conditions sometimes that get added, and it can be frustrating, especially when you know it's not a necessary condition and it's easy to get cleared, but they're adding it anyway. Now, reason I say that to you is we have to get to a place to where we understand we are on the same page. The first thing I always try to do with an underwriter is find common ground right away. That's step number one. What are you doing to find common ground with the underwriter? So I would do something like this, very simple. Let's just say it's a file that you keep sending them back documents and everyone's frustrated. You're frustrated. Everybody is. What a lot of loan officers say is, look, I keep uploading documents. I have to close Friday. Like, can you just get this done? Okay. Right. Now think about that for a second. My approach is, hey, I know I am frustrating you with this file, and I'm sure I am bogging your pipeline down. And my bet is I am slowing you down from hitting your goals as well. Is that a fair statement for me to make? Oh, no. It's okay. Like, that's what they'll do. Or they'll say, it's all right, man. What do you need? Yeah. I always start their team. And then when you start from there, we've now found a common ground. So now I move into step two, which is, hey, here's where I'm at with this. We have an opportunity to get this off of all our plates. You've spent time on this. I've spent time on this. I know it helps both of us if this loan closes and can get us off our plates. Now, here's what I uploaded, and you're pushing back on it, and here's what you said. What can I do to get us on the same page, or can you be very specific with me with exactly the document you're looking for? Now, some loan officers out there might say to me, well, John, but what if I can just get it fixed and I just tell them to waive it or clear it? Fine. But when you call them back again in a month or 2 months, because you will call them back, you're going to need them. Is that call going to be one where you say and look at your partner and go, damn it, I roasted that person last month. I hope this is all right. Or is that call where you go, all right, I built a relationship with this person. Now we can take it a step further. I understand transactions are very emotional. I'm very aware. I know the feeling. I know what it's like having to push a closing out the day of closing, and something just pops up out of the blue and it goes into QC. I know this. We all know it. How you handle yourself is what will dictate the longevity of your career. You do not want to be the person that's known as somebody that constantly complains and doesn't ever try to budge or bend or compromise when talking to an underwriter. So it's really important, just like the way I talked last week with variable income, how we explain and express ourselves to the underwriters and the questions that we ask for them. So step 1 and step 2 are very simple. Now, step 3 is where you take it to the next level here. Step 3, what I always do is when I hang up that phone, I always am looking for an email recap to come my way. The email recap coming back allows for minimal or no confusion. I'm not going to say zero confusion completely. Minimal, potentially no confusion is the goal here, but minimal confusion. It is very important you take your time to make sure that email goes out either to you or you're sending it back to the underwriter explaining exactly what you just went over. And then from there, if it's something that I don't need to push back on heavily, well, then what I do is I call the client and I tell them to get it. Last week as well, what we talked about was, or 2 weeks ago, was the way that you speak to your consumers or to your agents. What you don't want to do is hang up that phone and go to your client and say, this underwriter's dumb. They don't know what they're doing. Oh, goodness. Yeah, look, that's not on me. It's you cannot relinquish the power that you have. You are now telling this consumer, we talked about it, you're telling this consumer, I don't have power in this situation. I'm powerless. That does not work. So let's work on our communication to underwriters. Matter of fact, most of the people that shared my content last week were underwriters. So yes, y'all, I'm showing you love back to the underwriting group out there. They are here to help. They get paid the same way. They have goals to hit. Now, am I saying every underwriter is on top? No, I'm not. But guess what? Neither is every loan officer, y'all. As much as we might think we're not all that great either. Some of us are, some of us are not. Some of us have great days, some of us have bad days. Same thing for underwriters as well, but we have the same goal. Get on the same page, articulate yourself properly, and ensure that the situation is assessed from top down. Remove the emotion the best that you can, even though it's your deal. But please, 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 this will make your life easier down the road, even though it might not feel that way up front. So I wanted to share that with you all. I want to give you 3 simple steps on communicating with an underwriter and keep giving you more and more of these nuggets, because this is what gets you to that next level. Because the difference is that one loan, right? It's that loan that potentially dies because of communication. It's that loan that doesn't get to the finish line because we're yelling and screaming at each other. That doesn't help. It gets you nowhere. Stay focused, stay poised in the pocket, and learn to be direct, and learn to articulate yourself with professionalism, and learn to speak to the underwriters like a human being, because they want to help as well. And when you do that, you'd be surprised how many incredible relationships you can build.
Absolutely. I mean, you're on the same team, right? You're not working for the same company, but you have the same goal. And from a consumer's perspective, like, you view your realtor, your mortgage broker, your underwriter, even though you only probably hear them, you don't actually talk to them. You view them all as on your team to get the home for your family. So
it is, man. And the team
yeah.
is, it's like, I love that too, Tom, because you're right. It is a huge team, man. And
It's all from perspective. Like,
you need people to help you close this loan. Like, it's all the same goal. You have a consumer that wants help to close this deal, and you have multiple people from multiple companies that have to work together to make it happen. So I love that.
absolutely.
You're spot on.
Absolutely. Well, if you want more sales training live and in person, you can come visit us in Nashville at the end of October. It's going to be a lot of fun. We got Fuse coming up. If you haven't claimed your ticket, claim it. If you aren't a name member, become a name member and claim your ticket. Scan the QR code to learn more. We have a bunch of announcements dropping. Check out AIME socials. We've been dropping a lot of cool stuff, new speakers, new hype video, tons of cool stuff. So go check it out, get your tickets, and we'll see you there. On the other end of this, we'll have story time with John.
Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimgroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, and we're back. John, the floor is yours.
Yes, sir.
Have story time.
I can't. I don't have confidence. We've all said it to ourselves. I said it to myself, and there's days I still say it. It's just natural human behavior. Is unfortunately how, as you go through the world, it's how it shapes you. And over time, confidence is something that you build up. I'm a big believer that confidence isn't just one thing. Confidence is an embodiment of all the things that you like to do in your life. And that could be personal, that could be work related, that can be you're really good at writing loans, that could be you're great at playing video games, that can be you're one of the best power walkers in the world. I don't care. Confidence takes time. And that word I can't and that lack of confidence is something that every entrepreneur struggles with. Matter of fact, in the 90s, there was an entrepreneur that we all know, Sara Blakely. And Sara Blakely, she is the founder of Spanx, multi-billion-dollar organization. She became the youngest female billionaire in 2012. But let's hear the story of I can't. So Sara used to sell fax machines door to door. That's actually where she started, is she would sell fax machines. Yes, y'all. Fax machines door to door. Those huge ones. This is the 90s we're talking. We're not talking these small faxes that are easy to maneuver. We're talking monster fax machines. And she used to have to go door knocking, and she hated it. She despised every second of it. She'd show up, go into the office, and she'd say, oh, God, here we go again. She'd say things like, I can't call that big corporation to get us in there. They already have somebody. Or, I can't make another call. I don't want to knock on another door. And that was her mantra. She actually says, I had the I can't mantra. Now, we might tell ourselves we're positive and we're dialed in human beings, yet we have an I can't mantra. And so she had to start shifting her focus. And she was like, where do I start? What do I do? And she applied this method. And the method that she applied was really simple. It's a method you hear all the time. It's the just one more method. So whenever she got to that point selling fax machines, and she'd get to the place where she said to herself, I just can't, you know what? I can do one more. And so she starts changing the way she's speaking about herself and about her work and about her craft. And she would do things and say, I can call one more manufacturer. I can knock on one more door. I can make one more call. I can go to one more meeting. And she lived by this. And she started to grow her brand and she started to grow her confidence. And then years later, she had this wild idea. And it was for a footless pantyhose, believe it or not. And she had this great idea for footless pantyhose. And then all of a sudden, the I can't mantra came back. She said to herself again, she goes, I went into the same mode I did when I was selling fax machines. I can't compete with these billion-dollar companies. I can't get into these large manufacturers. I can't. And after a short period of time, she said to herself, she looked in the mirror and she goes, you know what? It's time to get back into the just one more mentality. And then she got right back to it. And when she would get frustrated or she'd get upset, she'd say, I'm going to call one more manufacturer. I'm going to call one more retailer. I put up two fingers there, but I'm going to call one more retailer. And she kept doing it. And every day, just one more than the day before, one more than the day before, one more than the day before. And with under 3 years, she sold to Neiman Marcus and became the youngest female billionaire in history. She started with fax machines. Fax machines. You sell mortgages. You sell something almost everybody wants. You sell a dream. How do you talk about it? How do you speak about it? How do you speak about yourself? How do you speak about the client? How do you speak about your day? I'm not saying it's going to be positive every single day. What I am saying is stop saying I can't and replace it with I'll do one more. That is my story for all of you today. I hope you have a beautiful day. Continue to press forward, continue to stay focused, continue to keep selling and having some fun in the process. Take care.
I love that. That's so good. I and you can take it as big as you want. I can close one more loan. I can like it's a process, right? Or it can be as small as you're in bed reading a book and I'll do one more page, one more chapter. It's just whatever you can apply it to so many things and it all just equates to growth. It all equates to you growing and you learning and you doing more and more. And I love that story. That was awesome.
Thanks, man. I enjoy telling it, and you're spot on, and it's hard. Like it's hard. We're not, y'all. Tommy and I look. We're not sitting here telling you it's so easy for us to get up and do one more. We get it.
One
There's
more
life.
podcast.
Yeah, y'all. We get it. There's life there, but consistency matters. The little things matters. You can miss a day, never miss twice. Cool.
Absolutely.
Thanks, y'all.
Absolutely. Thank you for tuning into this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel. Ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. And remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.
Thank you very much, team.